Hello everyone, good evening. Sorry, it's morning, good morning. It's February 17, 1:27 a.m. So I want to give an update and also an analysis on gold. Alright, so during the first week or probably the second week of February, I talked about the bearish move on gold. And I was actually looking for it to sell off from here, but the week ended right there, and then the new week opened and it just swept that previous week high. Alright, so that was last week, right? So the first week, that was when I was looking for sells from here, but you can actually see the week ended right there on Friday on that old block. So whenever the week ends on a point of interest, you should probably just forget about it, because when the market opens, it is going to sweep that area because it has to deal with a range of previous week high and previous week low. So last week we took that high, it traded higher and went for that previous week high. And throughout last week it was actually ranging. I was trying to look for a setup, but there was nothing seen right there, because you can actually see how the market ranged and then finally closed. Also, that first week of February, when I was looking for bearish move on gold, you can actually see it traded down into the opening price right on Monday before it came back up and closed right there on Friday. So there was nothing serious happening right there. Now I will now look for a directional bias, which is too bearish, because I can see what gold did right here by still being inside the bearish fair value gap and inside this daily range high and low, and that daily range high and low is actually the equilibrium price right there. We actually see it trading to 55%. It is still an equilibrium. All right, not yet on a premium, and on the daily time frame, that is the only area that I have has the fair value gap. Also, previous month, which is January, started from here. January high, January low, traded higher, and January gave us this high. So if gold was to go higher, the month of February would have actually showed us that structure by printing high, low, and if there was a bearish trend from January, it will violate that bearish trend and shift to bullish and then continue to go higher. But I made mention that this is just a swing leg. This is the high, this is the low, and inside here there was no bearish structure, in which this will confirm me going bullish by violating a bearish trend. Alright, so I made mention that we are going to fill up this sell side inefficiency that we have right here from the daily time frame. And during the first week of February, nothing serious did actually happen. Price was just ranging, including the second week of February. Now we are currently on the third week, and I noticed what happened right here. You can really see what happened right here was that price swept first week high, right, which is the sweep of previous week high. And I am still anticipating for it to go lower down to this low, because there is actually no bullish trend that I've seen right here. Rather, it was just a ranging market. So we can now quickly go down to the 4-hour time frame, and I want to explain something that I see right here. Right, so during the last week where the market was busy ranging and manipulating, I actually did see that it traded down on Thursday into an area of bullish fair value gap. Right, now I will not look at this as a high probability fair value gap, for the reason that there was no like a structural break, there was no structural shift seen. You can actually see that this was a range. Alright, so we trade down into that area on Thursday and we trade higher. Now why it was also trading higher, there was no confirmation to go bullish because there was no violation of an opposing trend seen, and that opposing trend I'm talking about is a bearish trend. All right, there was no bearish structure that was violated to go bullish, because what I can actually see again was that price was filling up this sell side inefficiency that we have right here. All right, so that was on Friday. Friday traded higher, and now this week opened. And I'm seeing something interesting, and that interesting stuff was how price was respecting the opening price from last week. This is Monday's opening price, and this is the Tuesday, because I was expecting to see a clean trade on Tuesday last week, but nothing was seen. And yeah, I also made mention of it on my WhatsApp channel. So if you have WhatsApp, I will put the WhatsApp channel link. You can join, and you also get to see the updates that I always drop there. All right, so this week opened, and I can see that we are filling up sales at inefficiency. It traded into premium and respected this bearish order block right here, in line with the previous week opening pricing of Monday and Tuesday. So these opening prices were acting like an area of resistance. All right, so I am really anticipating for the market to go bearish, because looking at this, I don't see a bullish trend. I can see that it is also ranging, and why it was ranging, the external high is this and the external low is this. Now the anticipation is this, that since the external high have been taken out, liquidity resting on this high, which is the basket liquidity, has been taken out, then that means it needs to go to sell side liquidity, which is the external range low right here. All right, so this month of February is not too clean like that of January, where you can see low, high, low, high, low, high, low, and all of this was clean setup, because you can actually see all of them were reacting from sell side inefficiency, buy side inefficiency, until we finally reached that all-time high for January on $5,598. So January was actually clean, but this month of February we entered the range, and it's telling why I'm seeing this. What I'm seeing right here is that it's showing a sign of weakness to go higher. All right, so February just ranged, and since we are ranging, then this is the point where I apply a daily range strategy. Looking at this doesn't show me a bullish move yet. All right, and since we see this previous week high taken out, we have this sell side inefficiency given to us, and price respected the premium. I am anticipating it to go lower. That is all I see for gold. Also, I was also looking at DXY to see if the dollar is trying to regain strength. So if the dollar is showing a sign that it's regaining strength, then it's likely that every other pair will be bearish. All right, so on DXY, I can see there is inside a bullish old block or an area of demand, the sell candle before the bullish move occurred. This is actually our structural low, high, price straight down into its low, and we swept previous 6-month low. Now I was on the daily time frame and trying to figure out if, let's go to the weekly time frame. I'm trying to figure out if this range occurring on that old block is a Wyckoff accumulation phase. Now I am trying to understand if this sweep on September is the spring. All right, so if this is actually the spring, then I will just be waiting to see it go for this high. All right, because this is actually a range also, but kind of like looking like accumulation, because actually see the way it's been trading is quite different from something you call a range, just like this one is a range. But when I'm seeing a formation that looks like this, two things comes into my mind. If it is happening at a discount price or at an old block demand or supply, I anticipate if it is going to be an accumulation phase or a distribution phase. Now in this case, it is at a discount inside a demand zone. I am trying to figure out to see if it's an accumulation phase, and also for it to return back to the opening price of 2026. All right, so once it gets there, I will be looking forward for it to go to this high, because looking at this, we have this high, we have this low. We swept this September's low. Yeah, so we trade back into sell side efficiency, but then sell side efficiency did not push the price lower last week to break this low. So seeing that failure to break this low, I am not expecting the dollar index to sell, because there was no bearish swing leg that was seen. So anticipating is to go hit that opening price for 2026, and we're looking forward for it to go to this high, because this is actually buy side liquidity pool. We're having an area of resistance just resting right here, and this area of support has been taken out, right? This area of support that we have right here has been taken out. So if support has been taken out, then that means we are buying the liquidity resting below here, the orders that are resting below here, that is at a discount, right? So we would like to deliver it to a premium pricing, which is the opposite side of the liquidity, which is an area of resistance. We have the buy side liquidity pool for the dollar index. This is actually how Wyckoff accumulation phase is formed. We have the PSY, we have the automatic rally, we have the secondary test, and I believe this should be the spring. All right, this is secondary test. This could probably be the swing to take out that support zone, and yeah, that is what I am seeing for DXY and for good. Looking at good on the daily time frame, you can actually see that there is actually no confirmed area to buy from. And what I meant by confirmed area to buy from the daily time frame is there is no buy side fair value gap or buy side inefficiency or a bullish trend formed or an old block or a demand zone being given. There is actually nothing there. You can actually tell that this is a range. All right, this is a range in market. So since there is no area seen on the daily time frame for me to say, all right, it's going to buy from that area, then I am not confident to say good is going to buy, but looking for sales, because it is reacting from where an area where we have in sell side inefficiency. All right, so also the sweep of the first week high. So yeah, that is what I have for you guys. So take care and be safe.